We're actually talking about insuring sugarcane processes. So just want to bring up Russell Mehmet from Willis Towers Watson. So here we go.
Thank you very much. And as you can see, I'm joined by Peter Thorburn from CSIRO. I know everyone's very excited to hear about insurance, but what you'll be a bit more used to is the agronomy and the science side. So Peter will deal with that to start, and then I'll move on to the insurance side of things. So Peter, over to you to start things off.
Thanks, Russ. I suppose on behalf of the two of us, just to acknowledge the traditional owners of this land in which we're meeting, also the lands on which this work was done and to which it's relevant, and the waters that it will have an impact on. Cedric, who's ducked out, did a great job at the beginning of the session talking about the role of market-based instruments like credits or financial instruments like insurance in getting ecological outcomes. And he also then, much to my appreciation, talked about the importance of good science underlying these things. And so my role here is to talk about the science that we've done that's then allowed Russ and his colleagues to create a well-first insurance program based on that. A little bit of background. I think this won't be a surprise to anybody, but lots of water quality is a threat to the reef. The one we're focusing on is dissolved inorganic nitrogen. There are a number of proven, land management, farm management, crop management practices to reduce discharge of dissolved inorganic nitrogen, but these need to be taken up. And the reef report cards that I think we all know about, show, at best moderate progress towards meeting targets, which is implying that we need some sort of innovation in changing the land management practices. So digging down to the specifics here, nitrogen is critical for crop growth. That's why people put fertilisers on their crops and possibly on their lawns. But the question is, what's the optimum amount of nitrogen fertiliser to apply? And that's actually surprisingly an uncertain, unknown amount. And so how do farmers working with high value crops, and sugarcane in the big picture is a high value crop, manage that risk, that uncertainty? They tend to look to apply high rates of nitrogen. Now this would be fine if you were dealing with something like another nutrient like potassium that has much smaller environmental consequences, but with nitrogen, their risk management strategy has an impact on the environment. So, this provides an opportunity for innovation, the innovation being insurance to manage risk rather than over-application of nitrogen to manage risk. And so we're talking about risk and stuff. We've got to be able to quantify that risk to be able to move up that sort of chain that I've just described. So here's what we've done. I'm not going to go into detail. We have worked out how to quantify the risk that a reduction in nitrogen fertiliser from some high rate to a lower rate will pose to yields at basically a field scale. Now this is really important because for two reasons. Biophysically, the risk varies from field to field based on the soil type, some of the aspects of the crop management, also the climate. And secondly, anyone who's dealt with farmers, they know their farm and their region at the back of their hand, and they know that this field behaves different to that field behaves different to that. And if you ignore that, if you try to say, the whole of the Mulgrave Valley, everything acts the same, you're sort of dead in the water. So we take the ability to do the analyses at this scale with our APSIM farming systems model, which is the best tool available to represent sugarcane growth as a function of nitrogen application, all those things I've said there, plus lots more. In fact, it's the only tool in the world that's able to do that for sugarcane, and we do that, we look at the risk, which then can be passed on to Russ and his colleagues to turn out premiums. But then you've got to come back a year later and say, oh, well, for the weather that crop experienced, the yield was reduced by the lower nitrogen rate. Of course, it's this weather variability from year to year that actually drives that unpredictability of optimum nitrogen. And so that provides a mechanism for assessing the loss. And Russ will tell you how that actually gets translated into business.
Hopefully. Thanks, Peter. Yeah, so when Peter came to us with the problem of designing a policy under using conventional methods, like your house, you know, the damage happens, the assessor comes out, looks at the damage and makes the payout, we realised that that was just not going to work with what we're talking about, the administration side of handling that, the policing of the amount of nitrogen and the reduced amount of nitrogen from the farmer, the payout, how much yield did he was never going to work. Hence we moved towards what's called the parametric approach, which looks at the data that Peter has modelled through his system and then applying that to the actual climate that has occurred during the previous 12 months to look at, depending on how much the farmer has reduced his nitrogen level, the potential loss of yield, if any, that he's had at the end of the 12 months period. So that's really is an outline. If you go onto the website, the WTW website under nitrogen insurance, that is the basics of how the cover works. It looks fairly complicated, but extremely simple if you put in the information online. So it starts off by the farmer selecting how much he wants to reduce his nitrogen on that top left-hand column. If he reduces it from, say, 6 easy steps, says 160 for that paddock, and he decides, no, I can be more practical and potentially practical if I reduce down to, say, 120 kilograms per tonne, knowing that if he has the insurance, then there is a payout for that loss of yield at the end of the 12 months. So the data, again, Peter went into in detail, the climate, the soil, the crop, works through what the premium is, and the farmer chooses the cost of cane and puts that into the system, and a premium is calculated. If he decides to go ahead and buys for that 24-25 period, he does so, and then at the end of the 25 growing season, the harvest season, he looks at, the system looks at whether a payout, a simulated payout, would have applied based on that 50 years model data, historical data, compared with the past 12 months based on the BOM data. So that's as simple as it gets, and then the outcome is provided to the farmer. We provide that and to the insurer's liberty, and if there's a payout applicable, then the amount is paid within 30 days of that end decision. Now, inclusive with that, with the actual payout, if he did have a yield loss, will be the savings he made in not applying the nitrogen to that particular, at the start of that season. So in our example before, 40 kilograms of nitrogen would have been saved, and as it's around twice the price of what it was 2 years ago, that's a significant amount. That covers that. And I think I've jumped ahead a little bit here by sort of explaining the simplicity of the product. On the right-hand side, it shows the data that the farmer puts in, the climate zone, works out where he is. Soil type will come up because he actually, as Peter said, chooses his own, the specific block, so it's very personalised. You look at which month the crop started, the original nitrogen rate, 160 down to 120. The rate there is the premium rate that shows. Gets a block number, the block's area of 10 hectares, and the cost of cane that he wants to use, up to $60 now. So it's all very tailored individually. He looks at each block. It's a question that's come from farmers. How many blocks can we look at? Because as Peter said, they all vary. Blocks can be done individually and are done very quickly. The potential that the saving in the nitrogen can be greater than the actual cost of the insurance is something we've seen quite a few times, so extremely beneficial. And of course, if he's able to reduce his nitrogen level and still receive a yield payout, then the farmer is extremely happy with that situation. So the solution is, very importantly for what we're here for, is that if you comply, first thing he wants to comply with farmer wants to comply with regulations, but at the same time, if he does that and the nitrogen is reduced, then the quality of water is what we're all looking towards. So I've only briefly touched on here, that's the nitrogen product. Insurance has a lot of other potential value, as Cedric would know, because we've talked a bit about this, of various other events that could happen to barrier reefs. Tropical cyclones, sea surface temperature, very topical at the moment, wave height, COTS outbreak, which I hadn't really given thought about, but Cedric said it's all measured, so a massive increase in COTS that could affect the water quality in the barrier reef. The difference in the two at above a certain level would be insurable. That type of thing. Claims payments can be used for any purpose. They're paid within 30 days, available for any purpose that would be suitable to the organising committee or sponsor. A couple of examples that WTW have done has been a Belize Barrier Reef catastrophe wrapper. I think we called it that, but it's to do with finance and the benefits of reducing funding as when a major event, in the case of a cyclone or rainfall in a particular area, hits. And one was just been done very recently, is in the Fiji coral reef, where with BHP Foundation, they've been able to support a cyclone, what we call a cat in a circle, cat in a box, cat in a circle. So any cyclone above a certain category within a certain area, the payout's made. So the final slide is in conclusion. It's insurance is always available for something, as you all know. But it's an innovative way and not really thought of for barrier reefs around the world. As Peter said, the Nitrogen Risk Project is the only one of its kind in the world with that sort of data sitting behind it. Can be used for many different areas, land management, water quality, which is in the nitrogen one, and of course for supporting and impacts on communities, on tourism operators. Again, Cedric and I talked about coming together for a mutual for tourism operators where they share in the cost of it and pay out following a big cyclone is paid out to the proportion of what they shared in the cost. It's a good way to help regions. Nitrogen we talked about at no public cost. The potential to develop new programs. So anyone who thinks about, wouldn't that be a great idea, parametrics is really open to any thinking, because if it's got the historical data that's robust and well controlled, and there's a good way of measuring it at the end, anything can be designed rather than conventional insurance needing claims assessing and that sort of thing. So finally, the challenge that Peter and I face is getting the word out there. We've talked to government, etc., and to the farmers themselves that it's a novel idea. So they really, getting the awareness and the education to farmers is the big challenge we face for what we hopefully will be beneficial to the reef. That's it. Thank you.
Thank you for that. And I have to say, I was actually involved in the cat in the box. I think it's a snappier title than cat in the circle, but essentially the Category X cyclone going into the box. So. So that's great. We do have some time, I think. We do have some questions if we still got the speaker relevant. So there's two questions. I'll go Barbara, ladies first.
Hi. Really interesting idea. I was wondering if the yield's a bit lower than anticipated, but the model says it's not due to nitrogen, do you have enough trust will farmers trust that outcome if that means they don't get the insurance payout?
Pretty good idea, but I'll let Peter step forward.
So the Rolls Royce for insurance is a Russ described indemnity insurance. You have a car, it's insured, it's crashed, you can see it's damaged, and all that stuff goes. When we started thinking this through, everyone hates modelling. Any modellers in the room here know that, you know, the only thing hated more than modelling is insurance. Try combining the two. So we looked at what it would take to create an indemnity product, and it would just, the overheads would completely kill the concept. So I suppose what we do is talk through with farmers that you're getting a simulation of what's happening on your farm. There are some things that are not included in the simulation, so that the real results might be different. Sometimes that might be in your favour, sometimes it might go against you, but this is the lowest cost way that you're going to get this cover. And it's, for me as a modeller who's spent his life doing agricultural modelling, it's actually quite interesting looking at how this conversation with the farmers changes the way they start looking at the modelling, because all of a sudden an insurance premium becomes a sort of a unified indicator of risk, and they start actually using the product concept as a decision support tool to work out, well, could they explore reduced nitrogen? Like, oh, the premiums here aren't that high. Maybe that's somewhere that I should be paying attention to. Oh, the premiums over here are really high. Oh, that's really risky. I should stay away about it. So it shifts the conversation from how many decimal points of accuracy does your model have compared to the real world, to this more conceptual understanding of the situation and how it happens. It's actually been, you know, quite instructive from that point of view.
Russell Basilaic from AIMS. It strikes me in your commentary there that one of the risks we're running around pilot deployment at the moment is, you know, we go through and we deploy and there's damage done to the reef, and how's that going to be restored, recovered and funded, should that occur? And I wonder whether there's room to innovate in the insurance product of what you're talking about there, to at least share and bear some of the costs of what a repair might look like. So I think it's worth taking that up and talking a bit further.
Yeah, that's great. Arising from a climatic event, a serious...
Well, not necessarily climatic, but also some kind of issue with the deployment. So if the pilot deployment isn't successful and damage is caused into the reef as a result, one of the issues and the risks being run by all the parties considering that is who bears the cost in the World Heritage Area to repair and restore what damage might occur.
Yeah, that's right. Yeah, it certainly could be done. Yep.
Yeah, thanks very much. Like, I love that project. I heard that before, and I'm like, this is such a good example from a market-based instrument that seems to work. So great. Yeah. I have a question. How do you verify that the farmers actually reduce the nitrogen application, what they say? Is that based on trust?
Trust. Yeah, it's part of the policy, and a couple of other things. They've got to pay the premium for a start, and there's no guarantee that they will have a loss, a yield loss. So if someone's prepared to pay the premium on a chance, you know what I mean? It's and there is built into any insurance policy the trust element, the utmost good faith, it's called in insurance. So it's expected that they do it. But there's no audits. The insurers doesn't go out and audit the farmer or anything of that nature.
And is it also a cost saving for not applying that much nitrogen? I have no idea what that costs. So that's another incentive.
So there's no motivation for the farmers to pay money to cover the risk from reduced fertiliser,
that's it,
and then pay for that extra fertiliser.
That's true.
So it's sort of self-regulating in that way.
Yeah.
But the flip side is that if the contractor who's applying the fertiliser makes a mistake, they've got last year's instructions, not this year's instructions, then it's sort of the farmer doesn't necessarily get penalised for that specifically. So there's a peace of mind about it. So that's part of this sort of model-based parametric approach, the swings and roundabouts. Yes, it's possible some person might not reduce their fertiliser, but if that's done, there's no motivation, but if it's an accident, they're not going to get penalised, so they don't have to lose too much sleep over that.
Yeah, the decisions from the model, and the insurer pays on the model, CSIRO's model decision, and that's it for them. Yep.
And we might take one last question on insurance from Myron, though. Who said insurance was boring?
Yeah, it's so popular.